Hi, good afternoon, everyone. This is Amol from PeopleStrong, and I welcome you all on behalf of PeopleStrong to this webinar in which we're going to look at the new wage codes. It's still a few minutes for 3 o'clock, and we'll just give it a few more minutes and wait for some more participants to join in. Please be patient with us. I hope you all can hear me all right. Yeah, thank you, Raghavendra, for confirming that. We have received a very encouraging and enthusiastic response to this one. We're very happy that all of you have taken the time to join us on this particular session. So it's 3 o'clock, and we'll just give it a couple of more minutes for more people to join in. There are about 50 of us now, but I think more people are expected to join in. So we'll just give it a couple of minutes and then we'll begin. In the meantime, I'll anyways give you some instructions in terms of how are we going to do this. I think by now, most of you are familiar with the Zoom interface, yet in the interest of some new people, I will mention that you will see Q&A and you will see chat on your screen, right under where you see all the videos. All three of us are seen there in the video. So you can use either the Q&A or the chat window to post your questions. And, in the middle of the session, we will then take some of your questions. You could also use those windows to specify what specifically you are looking for from this webinar, what's the reason that you decided to join us today, so that we also able to then try and cover some of those aspects here. I will be primarily moderating the session, while Vikas and Shantanu are the subject matter experts who will be walking us through the details of the session. All right, so I think we will get started while more people join in. We are now close to 70 plus, and I think that number will continue to climb as we go further. But in the interest of time and for all of you guys who joined us on time, we will begin. So once again, thank you very much and welcome all of you on behalf of PeopleStrong and the entire PeopleStrong team. We are very happy that you've decided to join us on this particular session. The primary focus of this session is to give you a quick overview of the 4 labor codes that are proposed by the government of India. These are, as I'm sure most of us are aware, are currently in the proposal stage. This is one of the landmark decisions that's been taken by the current government, where 40 plus labor laws are being consolidated under 4 labor codes. Some of the provisions are very, very future oriented and also reflect the current realities of the workforce and the businesses. The idea behind this session is to give you a quick overview of what are some of those key changes that are being proposed under these 4 codes. So this is going to be a brief overview of those key changes, while we will also then look at specifically the wage code, because I think that's one code where we all are more interested and want to know more details. I will just quickly introduce my colleagues on the call. So we have Vikas and Shantanu on the call with us. So Vikas leads our entire payroll and compliance related practice, and he's an entrepreneur at heart, and he's been with this whole journey of payroll for, I think, as long as we all remember him. Has been with PeopleStrong and even before that. And Shantanu is part of Vikas's team, where he leads our entire compliance related practices, and both are subject matter experts on this. So without any further delay, I will hand this over to Vikas to begin the proceedings. Over to you, Vikas.
Thank you so much, Amol, and I would like to first of all like to thank everybody for joining in, and I hope that everybody is doing good, keeping safe. So there has been a lot of learning that we have done in the last 1 year due to the pandemic. And I believe we all have started appreciating a lot of simple things in our life. One of them is, of course, the learnings that we have done. We have done so many things in the last 1 year, which were so unprecedented, and we thought that we could not do that. But now we are able to do that. So there have not been only bad things during the COVID year. There has been a lot of positive things also that we have done. Now, as Amol has said, what we are going to cover in this webinar is two things largely. The first is that we have assimilated all the codes, all the acts which have been now consolidated into largely 4 wage codes. So what we are going to cover in the first session is that what was the definition of the act prior to this and what is now. So the first session is on that. So the first session will be that this was the definition before the consolidation and this is what is going to happen now. So then and now is the comparison that we are going to give you. So there will be certain points which are also similar, which were there and which are still there. So that is the first session. The second session we are going to take is that what is the impact of the new wage code on the compensation and benefits. So largely as you will find that the industry is based on the CTC based structure. So we have taken a couple of examples that how we are going to maneuver around so that come this April or whenever this wage code is going to be applied, how the restructuring of the compensation and benefit is going to happen. So next slide. So what is happening is that there are 29 acts which have been consolidated into 4 codes. We all will appreciate this is actually a very important move by the government, because earlier with so many acts that we had and the definition of wage, the definition of employee, the definition of establishment, the definition was different in different acts. Now with the consolidation, at least a harmony is going to come in these definitions. So it is going to actually have a very positive impact on the compliance thing that we all are going to do. Now we will showcase you what is basically the vision of the government with this. You will find that these wage codes that are coming, so primarily the government want that the social security for all employees should be taken care of, which is like the organized sector and the unorganized sector. So there is like, for example, gratuity which is to be paid for the fixed term employees, or the increase in basic will mean that there is an increase in retirement benefits. Yes, there will be a hit on the take home, but at least there is a benefit on the retirements. Then the government is going to have a central portal where the registration will be mandatory based on the Aadhaar, or creation of social security fund. So these are certain things which the government is going to do, and I think we all will appreciate. Then the government wants transparency to come in. Cutting down on the red tape will mean that lesser litigation will be there, which again will be more appreciated by us. Probably we all feel at times harassed by the inspection and the inspectors, which is going to happen. So this transparency is actually going to cut down on that. Government is saying that the inspectors are no longer supposed to be called as inspectors, they will be called as facilitators. Then today, India is ranked on 63rd position as per the World Bank report. And 2 years back, India was ranked on 77. So we have improved 14 places. And I believe that with the changes that the government is bringing, wage code being one of them, I believe that we will be in the top 50 in the next 12 to 18 months. Have to bring in those changes because we need the foreign investment. We need that the compliances and the statutory requirements should be easy to do, because then only the industry can focus on their main activity. And when we are competing with economies like China, China today is at 31st position as per the World Bank report. So we need to do a lot of things so that we are able to improve and we are able to attract that foreign investment. Then what this is going to do is that it is actually going to culminate into ease of doing business. So compliance burden is going to drastically reduce. For instance, you will have one single CLRA for the whole of India instead of each state that you have to go for. and government is going to bring in a lot of transparency. So ease of doing business is going to happen. The idea is that the employee, the employer, and the foreign multinational companies, there is something for everybody in this wage code. And when I say that there is something for everybody, this means that there is a lot of positive. Yes, there will be something that we have to restructure as far as compensation and benefits are concerned, because there will be probably an increase in the spend if we have to take care of the take-home salaries. But I think apart from that, there are a lot of positives that we can look at. So the next, now what we are going to do is I'll hand over to my colleague Shantanu. Shantanu is going to take us through the then and now slides, which is what was the act prior to this wage code and what is going to happen.
Thank you so much, Vikas. Now, moving on to the then and now, what specifications or what were the earlier provisions were there in the different acts and what now would be there. So starting with the code on wages, under code on wages, as Vikas has told, that there were four laws which are coming up: minimum wages, payment of wages, equal remuneration, and payment of bonus act. So starting with the minimum wages act, as far as the applicability is concerned, earlier, if I look at the earlier provisions, it was applicable to certain scheduled employments, which was mentioned in the schedules in the act. But now it would be applicable to all the employees of both sectors, unorganized or organized. The definition of wages has been changed. Earlier, the definition of wages as per the Minimum Wages Act was including the house rent allowances, but now they have specifically removed house rent allowance from the definition of wages. There is a new thing which has come up, which is the fixation of floor wages. Earlier, in the earlier provisions of minimum wages, there was no provision to fix the floor wages, but now the central government will be fixing a floor wage for different states and regions, and the state governments cannot fix the minimum wages below the floor wages. So this is the new addition which is there. And the time limit for claim wages, earlier, as per the earlier provision, it was to be done within 6 months, but now this increase has been increased to 3 years from 6 months. So this is also a kind of improvement for the employees, which they can look at. Now, talking about the inspections, in the current scenario or in the earlier provisions, surprise inspections used to happen. But now inspection would be done, but it will be thoroughly web-based inspection, and there will not be any physical movement of the inspector cum facilitators. And the document submission will also be done on the web portal as asked by the respective authorities. Talking about the penalties and imprisonment, this is the point in which there's a change, there's a drastic change. Earlier, the penalties and the imprisonment conditions were quite less if the employer was not following the certain acts, but now the limit has been increased drastically. As you can say that for earlier provision, the fine was up to 500 rupees and up to 6 months of imprisonment, but now this limit has been increased. Talking about the Payment of Wages Act, earlier the applicability was for those employers who were earning the gross wages of 24,000 for filing their claims if in case there is any claim or a dispute happened. But now this act or this code on wages will cover all employees. Moving on to the payment related to the cessation of the employees, as per the earlier provisions, the FNF or the payment has to be done for within 2 working days from the date of exit of the employees. But there was condition. The condition was the termination of the employment or the closure of the establishment. What Code on Wages has done is they have retained the earlier provisions.
Just a second. Somebody has said that. Somebody is saying that the PPT is not very clearly visible. Is that for everybody? Amol, are you able to view the PPT clearly?
Yep, yeah, because I'm able to view it clearly.
You're on mute.
I think it is because of the font
it's
type.
Go ahead.
In somebody's machine, maybe it is showing up. Yeah, let's continue.
Yeah, so I was talking about the cessation or the payment of cessation on the cessation of employment. The code on wages has retained the earlier provisions, which was termination of employment or closure of establishment. But the addition what they have done is they have added the clause of retrenchment of the employee and also the resigning clause from the establishment. So anyhow, as per the new code on wages or the draft rules, this, if the employee resigns or if the retrenchment happens, then the FNF needs to be done within 2 working days. Going towards the payment of bonus act, the applicability was still for certain scheduled employments and was still wages 21,000, but now it will be applicable to all the employees, including organized and unorganized sectors. Second point, which in which the change has happened, is that on the disqualification of bonus, there were certain misconducts like fraud, riotous behavior, theft, and misappropriation. But now, while retaining the early provisions, the additional point of conviction for sexual harassment has been added. So the code on wages towards payment of bonus act says that the conviction for sexual harassment, in case this conviction happens, the bonus will not be applicable to that particular employee. Yeah, talking about the bonus when dispute happens between employer and employer in case of higher bonus. In the earlier provisions, there was no provision in the act, but now the government has included a clause where it says that while there is a problem going on, or the case is in the industrial tribunal, it is the employer's responsibility or the liability to pay at least 8.33% of the bonus amount to the employee while the case is in industrial tribunal for higher bonus. So this is the clause which has been added in the code on wages. Talking about the penalties and imprisonment, earlier the amount was 1,000 rupees or up to 6 months of imprisonment, but now this fine or the penalties amount has been increased drastically, which can go up to 20,000 rupees. And in case of repeated offense within 5 years, the imprisonment of 1 month or a fine of 40,000 rupees or both can be imposed on the employer. Coming on to the last act, which is covered in the code on wages, it says that about the Equal Remuneration Act. It says that there's no change in the gender discrimination in wage payment fixation, but yes, they have added the point of recruitment. And if in case the work of similar nature is being done by both the genders, then there should not be any discrimination in that. And last point, which is the penalties and imprisonment. The penalties and amount is up to 20,000 rupees with a 5 years imprisonment. And in case of repeat offense, again, the 40,000 fine or both. So if you look at the penalties and imprisonment for payment under Bonus Act and equal remuneration, you will find both acts, penalties and imprisonment as same. Do we have that? Now moving on to the other code. Yeah. Is there any role? So now moving ahead with the other code, which is the SS code or the Social Security Code. There are 9 acts which is covered under Social Security Code. So as far as the Social Security is concerned, it talks about Provident Fund, payment of gratuity, employee state insurances, which actually provides the Social Security benefit to the employees. Talking about the Provident Fund, in case of voluntary PF coverage, if in case the organization had taken the voluntary PF coverage, which was below the threshold limit of 20 people, there was no looking back, even if in case the employee strength decreases or it continued to be less than 20. But under the Code on Social Security, there is an option of opting out of voluntary PF if it has been taken by the organization. And talking about the penalties and imprisonment, so it was earlier, it was 1 year and fine of rupees 10,000 with a minimum imprisonment of 6 months and fine of rupees 5,000 minimum. But now there's a drastic increase in the amount of penalties, which can amount from 10,000 to 1 lakh rupees, and the imprisonment from 1 to 3 years. So these are the two major points in which the changes has happened. Talking about the limits of PF is still 15,000, and the code does not talks on the limit of the PF contribution. And talking about the Payment of Gratuity Act, there's only one thing which has changed. They have replaced the tenure of 5 years to 3 years for working journalists, and also they have added the clause of fixed term employment. So this is the major change which has happened. For other employment categories, the continuous service of 5 years still there. Talking about the Employee State Insurance Act, earlier it was not applicable. There were some districts or some areas where the ASIC was not coming under the implemented areas of ASIC, but now all 740 districts would be covered under ASIC. And they are also, the government is also looking forward to provide the ASIC support to gig, plantation workers and unorganized sector. So they want all these type of workers to be under the purview of ASIC. Talking about the employment exchanges returns, the organization used to file quarterly ER1 returns, but now there will be a single integrated annual return which needs to be filed by the organization, that to be on the career portal. For as you look at the current scenarios, there are some locations where the ER returns are filed on a manual basis, but now if this code comes into picture or it gets implemented, the organization has to file only one single integrated annual return, that to be on the career portal of the government. What are the other key changes which has happened under this code is the government is thinking of coverage of all the gig and unorganized workers under the ambit of social security scheme. The central government would be setting up a portal on which the employees has to register themselves, the gig and unorganized sector workers has to register themselves with the help of Aadhaar. And once done, then they can avail the benefit of the social security, which will be directly catered by the central government. So this is the major key change which has happened as written in the code on social security. Is there any question? Yeah. Now talking about actually the screen is I'm just sharing again. Sorry, actually there was some screen share issue. Now talking about the IR code, in the industrial relation code, there are three major things which has changed or they will be changed once this code gets implemented. It is the standing orders. The standing order earlier it was the standing order was applicable for 100 or more industrial establishment employees, where the establishment was having 100 or more employees, but now this limit has been increased to 300 or more. So if an organization or a factory is having 300 or more employees, then only they have to apply for a model standing order from the Labor Department. Talking about the conciliation proceedings, earlier the manual record maintenance was done keeping in mind the conciliation and disputes, but now the government is thinking to move towards the digital record maintenance for all the conciliations or industrial disputes happening with the Labor Department, and they are thinking to get the portal named as Samadhan. So all the conciliation reports, all the industrial disputes reports would be there on the Samadhan portal, which will be developed by the central government. Talking about the notice of strikes and lockouts, manual word was being adhered. If the organization wants to, of the employee employees or workers wants to go for the strikes, then they need to give the notice in writing to the labor authorities or conciliation officers. But now this all to be done through a digital mode, be it strikes, be it lockouts. In case of a strike, this is the new thing which has come up in this code. In case of a strike, the trade unions, if they want to go for a strike, they need to give 14 days prior notice to the labor department that from this particular day they will be going on a strike. And accordingly, if it is accepted by the labor department, then they can go for the strike. Talking about the OSH, Occupational Safety and Health Code, there are three things which has been added in the code, which is the annual health examination. So earlier there was no provisions in the annual health examination, but now it has been told in the act that the employer has to have the annual health examination for those employees who have attained the age of 45 years and above, and it has to be done within 120 days from the commencement of year. So it will be kind of a annual activity which employer would be doing, and it will be a kind of a extra liability to the employer. Also, the second point is journey allowance. So the journey allowance is totally for the interstate migrant workers. So the government has directed under the Occupational Health and Safety Code that the government has directed to the employers that they at least have to give a to and fro amount of journey to his or her native place to the employee from the place of employment, taken care the minimum service entitlement, periodicity, class of travel, and other such matters. So all these specifications will be told by the appropriate government. But yes, as per the new Occupational Health and Safety Code, for interstate migrant workers, the employer has to provide a journey allowance for at least once in a year from a place of work to the native place. Talking about the gender equality, it was, as far as the earlier provisions are concerned, it was partially implemented state-wise. For example, in Haryana, Section 30 exemption has to be taken as per the SND Act for if you want the women workers to work in the night shift. Talking about Karnataka, you don't have to take separate exemption, but yes, the information has to give to the authorities if you want to have the women's working in the night. But now it has been allowed. If it implemented, it will be allowed for each and every. There will not be any state-specific things, but the whole and sole responsibility would be lying with the employer only to ensure safety of all the women working in the night shift. So as Vikas was talking about the compliance burden, which would be reducing when he started the presentation. So yes, keeping in mind all the codes, if gets implemented, the compliance burden on the organizations would be reduced. So in this particular slide, we have shown that what are the current compliances which are being followed by the organization in terms of registers, returns, if you look at it, the numbers are huge. But if all these codes get implemented, the compliance burden would be reduced for the organizations. They don't have to get the separate registration. So example like CLRA, there will be a single integrated CLRA license for pan-India basis. Even the registers maintenance would be less as compared to what is currently now. So from the organization perspective, from the compliance perspective, yes, the burden will be very less. Any questions till this slide, please?
There are questions in Q&A section we can consider.
Yep, Shantanu, so there are a set of questions that are there on the question and answer one. So I think we'll take a few of them here.
We'll take one by one. So Shantanu has got the sheet. Shantanu is able to see that, and right?
Yeah.
Or I'll share my screen to you, and you can then do this.
So will the labor codes, the first question is, will the labor codes come into effect from April 21? So yes, as far as the news is concerned, all the information which we are receiving and we are discussing with the labor authorities, yes, till today, the information is that only, that all these labor codes will be effective from 1st April 2021. If in case any new information comes in, then it will be handled, taken care by. Second question, it may take employees beyond the ceiling limits would increase the ceiling further. As on today, as on today, the limits are still there. It may take employees beyond the ceiling limits would increase the ceiling further. Yes, as on today, there is no information on the ceiling part by the government. If in case the ceiling gets increased further, that will be known.
Yep. Shantanu, I think, we may run out of time if you have to go through each and every question. I'll just quickly ask a few questions because there is a repeat. I don't think, we will have the time to go through each and every question because there are some questions that are also repeated. I think there is some, a lot of questions around the limit, the PF ESIC limit for 21,000, 18,000, that kind of a question. So if you can clarify that quickly, I think that will help.
Yes. So as far as all these CTC or 50% basic salary questions are concerned, that will be taken in the next part, which will be taken by Vikas. So is the limit for ESIC 21,000? Yes, it is still there, 21,000 the gross part, the ESIC one. What is the applicability of gratuity in case of 5 days working company?
No, Shantanu, that's fine. So I'll let's do it this way. I will post some questions and you can just answer them because, like I said, I don't think so we'll be able to go through all of them. There are close to 30 questions there. So the other set of questions that I see are around the whole FNF piece, full and final settlement, and what would happen. Typically, companies do that within 45 days. Will there be any penalty? If it's not done within the 2 working days from the last day and all of that. So some clarity if we can show about full and final, I think that will help.
Yeah. So now talking about the compensation or the CTC, more as most of the questions are related to that, Vikas would be taking care from here on. So over to you, Vikas.
Yeah. So hello. Yeah. So Vikas, so Shantanu, can you also clarify about the full and final piece? There are a lot of questions around the full and final settlement. If employers don't do that within the 2 working days, is there any penalty around that?
Look, the FNF part is still there, and under the Payment of Wages Act, the provisions are still there that FNF has to be done within 2 working days. But there are certain circumstances in which the FNF cannot be done in 2 days because might be possible that the employer rejoins back or is absconding and is not replying to the HR letters as per the policy. So they have not changed anything. The concept of 2 days is still there, but they have added the clause. As far as the penalties or imprisonment amount is concerned, the code is silent on that. They have not mentioned anything about the penalties and the imprisonment. Hope the question is asked.
Okay, sure. And I think there are a lot of questions on the salary component structuring. How will this impact the basic salary that I currently have? If it is equal to minimum wages, how will that change? I think there are a lot of questions around that, which I think Vikas will take care of in the subsequent.
Yes. So
right,
2 the things that I want to clarify to all the people is, number one, yes, we will share the PPT with you. 2, the recording is there. So I will request Rajat, if it is possible, share the recording also. The third thing is that all the questions that you are actually putting in, we will try to answer as many questions as possible. And what we will do is we will then create the FAQs of those questions and we will email to all the participants. We can do that, right? So that wherever we can help, we will definitely share whatever knowledge we have gathered. We will share that with you. I will be focusing
and I think because there are a lot of questions.
Labor code, which is going to happen on the compensation and the benefit costs.
Because, sorry.
This is basically the new definition of wages. So as you have also asked certain queries. Now, what does this definition say? This says that the basic pay, the dearness allowance, the retaining allowance. This is actually going to now there are certain specified exclusions which the government says that if you are making a payment to an employee, so the top three categories should be at least 50%. And all these, which is stat bonus or value of house accommodation, employer contribution to provident fund, conveyance allowance, some paid to defray special work expenses, HRA, remuneration paid payable under settlement, overtime allowance, commission. These are specified exclusions. We have not added the gratuity and the retrenchment compensation because those are not to be considered while you are computing 50% limit. Now, the condition for this exclusion is that the blue area in the middle, let's say you are paying X amount to the person, and if the blue thing, all the components that you are seeing in the blue, they are 1 by half, then it is okay. If it is less than 1 by half, then also it is okay. If it is greater than 50%, then whatever is greater than 50% has to be added back to wages, which will mean that the computation of your compliances, which can be your provident fund, which can be your ESIC, which will be your leave encashment, superannuation, your gratuity will be done on wages. So anything which you are paying extra than 50% has to be added back to the wage. Now, this will definitely mean that there will be certain complications when you are computing your compensation and benefits for the employees. In India, we see that most of the organizations work on a CTC based structure. Now, CTC based structure seems to be a little flawed structure. CTC itself is important because basis the CTC, we do the budgeting, basis the CTC, we do the cost booking. So the concept of CTC is important for budgeting and for cost booking. But what we have done is that we have actually taken the concept of CTC at the time of recruitment. So while the recruiter is negotiating with the candidate, what we did, we started negotiating on CTC. And while we were negotiating with the CTC, the employee and the employer, and we were not looking at the government contributions. So employer perspective was that what is the best take home that can be given to the employee, and even employee was interested in that. Now, employee was not looking at the long haul, which is what he or she is going to get as a retiral benefit, which is the contribution to provident fund and all that stuff. So when you calculate, when you compute your CTC basis, so there are sort of a lot of permutation and combinations that we do. And of course, we interpret the law basis whatever is beneficial to both the parties rather than beneficial to the government. Now, what government is saying is it is bringing in clarity that instead of doing the CTC restructuring, probably interpreting a lot of allowances, a lot of interpretation was done to save the statutory obligation, probably that we all have to let go of. Now, the condition, as I said, for exclusion is that anything which is greater than 50% has to be added back to the wages. So, and of course, the last thing is that if you are paying wages in kind, so if it is 15% of the total wages, more than that has to be added back to the definition of the wages to compute what is wage. Now, I will take you to the next slide where we have created 3 scenarios. This is like scenario number 1 is where we say that the basic is 50%, the excluded allowances is 50, and the total is 100. This wage definition, it is absolutely correct that your wages as per code is 50. Scenario number 2 is that if your basic is 25, which normally we find that we reduce the basic because we are then able to reduce the liability which will happen due to gratuity or leave encashment. And of course, the PF contribution, because we also have to take care of the take home salary of the employee. Now the excluded allowances will be 75 here. Now in this, again, the wages should be 50. In scenario number 3, if you already have a very high basic, which is 60% of the total remuneration, and your excluded allowances are 40, so your total fixed pay is going to be 100 and your wages is going to be remaining 60. one of the questions that was asked was whether you will be considering the variable. So it is as per the last screen that I showed, each and every amount which is being paid to the employee. Going back to the previous this one, so you will find that there is overtime and commission which is there, right? So there can be certain variable payments which the employer is making to the employee. So anything that you are making to the employee will be then considered. Then we are saying that so this is your current state. So your basic is 25, it is moving on to 50%. These are all your exclusions, and your exclusions have to be 50%, so that in the total compensation of 100%, your basic salary is 50% and your total exclusions is 50%. So what is the impact? What is the impact of basic pay when the basic pay is moved? So basic is 25 in this example, and now it is going to be 50. Now with this, what happens is, so if we are having a CTC driven, or rather not a CTC driven, just an example, and then what is the impact when it is a CTC driven thing? So if basic is 25 and your provident employer share of provident fund is 3 rupees, your flexi basket is 72, making a total of 100. Now on this, employee contribution is 3 rupees and employer contribution is 3, which you are deducting as part of your CTC, and gratuity is 1. So earlier, if the employee was earning 93 or 93%, now with the new structure, which is 50% of basic, flexible at 44, employee share of 12%, which is 12% of 50, which is 6. And similarly, then there is employee share. So now the cash in hand is going to be 86, which is a difference of -7. So under a CTC model, the moment the basic is increased, your provident fund, your gratuity contributions would reduce the take home salary. Now, in case you want to protect the take home salary, then of course, in one of the screens, we have also highlighted how you can protect that take home salary. But again, that protection will be done to a limit. This will result in reduction of salary in hand, and the range will be somewhere around 3 to 6% as provident fund contribution and gratuity will increase. And this is when you are having your CTC based structures. At the same time, employees would have a reduced flexible allowance basket. So from 72, you are moving to 44. And when you're moving from 72 to 44, this means that your tax saving component also gets reduced. Depending on the salary budgeting for 2021, which is for everybody, each organization, now there is a possibility that employees do not see a very significant increase in cash in hand, even if you are giving them increments, or otherwise the employer has to take that liability. Then what is the impact on the provident fund and gratuity? So when the basic was 25, then your provident fund was 3 and gratuity was 1. So this is for all the employers who were not using the CTC based structure, but who were using the gross pay structure. So when you were 25 for basic and 75 flexi basket, then the provident fund contribution by employer was 3 and gratuity is 1. So your total spend was 104. Now, since it is going to be 50 as basic, flexi basket is 50, and your total spend was 100, but because there is an increment in basic, so in this example, you will find that we are doing an increment from 25 to 50. Probably in different organizations, it can be 30 or 35. So you will have to do certain math around it. Now, in this example, when it moves from 25 to 50, so your provident fund increases from 3 rupees to 6 rupees, and your gratuity increases from 1 to 2. This means that your spend is going to be 104. So there is an increase in wage bill. You are doing a CTC based structure, then if you are not taking the higher spend, then employee will get a reduced take home. Otherwise, you will have to increase the CTC, and the CTC that you will be incrementing will be somewhere in the range of 6 to 8%. Then, because there is an impact of provident fund and then there is an impact of gratuity, so you will have to increase the CTC. So it depends on organization to organization. So those organizations who were actually not using the CTC based structure, they will what they will have to do is they will have to probably they can restrict the provident fund contribution to 15,000, and then their additional liability will be towards only gratuity, leave encashment, and superannuation. Superannuation is not used that much, so at least on gratuity and leave encashment. So where provident fund and gratuity is outside CTC, the increase in basic would lead to immediate increase in PF contribution and a higher wage bill by approximately 3 to 6%. And good point is that the increase in retiral, the provident fund, the employees can save some tax, because when you were contributing, and if you were not contributing the entire ATC of 1.5 lakhs, so now the employee can consume that. So you will be in a position to here you will find the calculation that we have done. So if the basic is 25% and now it is going to 50, and if the year of service was 10 years and the accrued gratuity according to that is 144, and now the accrued gratuity will be 288, which means that there is a increase of 100% of gratuity. Similarly, when we take leave encashment, so again, if there are 45 days of leaves which are to be encashed, and there was 37.5 which was to be paid as per basic, which was 25%, and now basic being 50%, so there is an increment in the leave encashment. So both gratuity and leave encashment will increase your wage bill. So the actuarial liability against the gratuity and leave encashment plans will definitely increase sharply. Depending on the ratio that you have, basic and fixed, include gratuity within CTC, but unlike provident fund, this will not help because the past service liabilities would also increase at one go. This means that when we talk of provident funds, so provident fund calculation will be prospectively, but the gratuity will be based on the number of years and what is the formula as on date today. Then is leave encashment plans where the encashment is paid on gross pay will not get impacted. So if there are organizations who are already paying leave encashment on the gross salary, components, rather it will reduce if you go back to the basic wage. The organizations should proactively assess these increases in the actuarial liabilities, and you need to have your budgets for the next years. These are certain illustrations basis what I have shared with you. So now here I'm taking an example that if the CTC of the person is 10 lakh rupees and the basic is 25%, which is 2,50,000, the employer contribution of provident fund is 30,000, which is 12% of 2,50,000. Gratuity is 12,025. And here when the basic wage becomes 50%, so the contribution towards PF is 60,000 and gratuity is 24,000. Now, in this case, the flexi basket is 7 lakh, around 7 lakh 7,000. And in this case, the flexi basket is 4 lakh 15,000. Now, here, when we calculate what is the cash in hand that the person is getting, so the employee PF share of 30,000 is reduced. Here it is 60,000. Then deductions under Chapter 6A, because we have already considered 30,000 in PF, so 1,20,000, and then 90,000 here because we have already considered 60,000. Let's say taxable salary is coming out to be 1 lakh because we are considering that the flexi allowances are all 100% exempted. Employee has given all the bills. So the cash in hand for the employee is 9,27,000, and here the cash in hand is 855. So the difference in take home salary is 72,000 for per annum. Now this difference actually means that it's actually not a loss to the employee. It's only that the cash in hand is being reduced, because this 72,525, there is an increase in PF contribution, 60,000, 30,000 employee share and 30,000 employer share. And after the PF share, the net impact becomes 12,025, which is an increment from gratuity, 12,025 to 24,050. So actually the net impact is zero for the employee, because of the simple reason that employees take home is impacted, but the total amount is being paid to the employee, and the benefit that employee gets is as retiral. And if the employee was not using the entire 80C limit, so the employee can also save some tax. Now in the next example, what we have done is the entire thing remains the same. The only thing that we have modified is that we are saying that let's have the provident fund, the employer provident fund, as 12% of basic. And the moment we do that, so the contribution is 21,600. Now with this 21,600 and the deductions we are considering as 150,000, adding both employee provident fund and the deductions under Chapter 6A, considering flexi allowances as 100% exempted, the taxable salary is this, and the cash in hand is 944. Here it is 932 because the only difference is the gratuity. Now we also did, so it's the same thing. So if you are, so the increase in retiral will mean that there is a lesser take home. Now, in case the employer wants to protect this, then this means that there will be a 7 to 8% of jump in the CTC that we have to do so that we are able to. So when you do the reverse calculation, you will find that there is a 7 to 8% of increase that you have to do in the CTC to protect the take home salary. However, the employee will get the benefit, and the benefit is going to be that the higher contribution to the provident fund. Now, this will also result in one more thing, which is that, as I said, that the higher retiral benefit, which is provident fund at least, will result in less tax burden for the employee. Another very important thing is that probably this will also increase the retention of the employee, because when we are using the CTC based structure and when the employee knows that out of 10 lakh rupees, 24,050 is my gratuity. So this means that employee will like to stay with that company and to get that gratuity from the company. So it can also be looked at that probably it will have a positive impact on the retention of the employee also. So these are the examples that I wanted to share. Now, what are the impact on other components? The impact on other components is going to be that since the basic is going to be increased, and when you calculate the house rent allowance exemption, so the house rent allowance exemption, there are 3 conditions, and mostly used condition is rent minus 10% to calculate the exemption. Now, the moment the basic is increased, so in the example that I have showed you, so when the basic increases from 2,50,000 to 5 lakh rupees, assuming the rent was, let's say 50,000. So earlier it, or rather 6 lakh rupees, or let's say 3 lakh rupees per annum, the rent was. So 3 lakh minus 10% of basic was 3 lakh minus 25,000. Now it is going to be 3 lakh minus 50,000. So there will be a reduced exemption on HRA, which will mean that the tax will go higher for the employee because the basic has increased. Then in case the organizations are having group life and accidental insurances, which are linked to basic, so that again will move on a higher dimension. Then there will be an increase in the national pension scheme and the superannuation, because the contribution of employer of 10% towards NPS and 15% towards superannuation is going to increase their wage bill. Then the leave travel allowance, if it was linked to basic, which was like 8.33% of basic, so leave travel allowance component can go up. The impact on employee state insurance is going to be two ways. There will be employees who will actually now come into the ESIC bracket, because there was 21,000 limit which was considered, and earlier or currently what is happening is we are adding up all the components to check whether the applicability of ESIC is there or not. Now we will be calculating ESIC on the wage. So this means that new employees will come into the ESIC ambit. And the second is going to be that if earlier I was contributing on ESIC 20,000 rupees, adding up all the components, and now it is only the wage, which can be, let's say, for example, 15,000 rupees. So the ESIC contribution will be on 15,000, not on this one. So there will be more employees who will get into the ambit of ESIC, and the current set of employees who are already in ESIC, the ESIC contribution will reduce. Thereby, the liability of the employer will reduce for those employees, but for new employees, it will increase. However, the benefit to the employee is that the contribution that the employee was doing, that contribution will get reduced. Similar cases for the stat bonus. So there can be a potential exclusion of employees. So because the threshold limit is of 21,000. So if the wages increase to 50%, the employee can then go beyond that 21,000 limit. And the moment the employee goes beyond that 21,000 limit, this means there is a potential exclusion of these employees in stat bonus. All in all, I will say that the intent of the lawmaker is that the way that we were actually governing or managing our compensation and benefit, which was done primarily using the CTC concept and then doing a top-down approach. So we were moving from CTC to down. And this, I think, started 10, 15 years back in the industry. Now, if you go outside India, you will find that there is no concept of CTC when a recruiter is negotiating with the candidate. It's basically the gross salary which the employee gets along with the benefits that the employees are getting. So I believe that the intent is that we should actually move away from these structurings, and we should actually do a very transparent and a very black and white structuring of the compensation, which will be easier to understand. And as government is bringing in transparency by making everything online, it is also, the onus is now on us as an industry that we also make things transparently, and the interpretation has to be very clear. Instead of interpreting the legal anomalies in the way that it is going to benefit the employee and the employer, I think now we have to be very clear. Like, for example, the classic case was the Supreme Court judgment in the 2018 period. So there was already a judgment which happened in Madras High Court in 2014. And that was with respect to the definition of the special allowance. So we started treating special allowance in a different manner. But the special allowance definition was something else. So we interpreted it in such a manner that it is going to absolve the organizations from the PF contribution, and it increases the take-home salary for the employee. So I think the time has come that we need to do a lot of restructuring in our compensation and the benefit program that we are doing for the employee. And it has to be done in a very straight-jacketed manner, so that the employees, the employer, and even the government, we are all going hand in hand, and we keep all things very simple and transparent. I will take your questions. Please let me know.
Yep. So Vikas, you can hear me? Hello, Vikas, can you hear me? Hello, Vikas, can you hear me? Rajat, Shantanu, can you hear me?
Yeah, we can hear you, Amol. I'm not sure if Vikas can hear you. Vikas,
Okay.
are we audible? No, I don't think we are audible. Shantanu, can you hear us?
No, I think both of them are not able to hear us. Okay, let me just.
Amol and Rajat, if you're speaking, I'm not able to hear you guys. I'm sorry. I I was not able to hear you.
Can you
Can
hear
you
me
hear?
now, Vikas?
Yes, I'm able to hear you now. Thank
Yeah.
you.
Okay. Yeah. So I think there are a bunch of questions on the Q&A piece that that I've also picked up.
Sure.
But I think your calculation piece, probably has given some clarification to a lot of those. But I think there is one interesting question there. So if the the variable or the flexible allowances basket includes commissions, right,
Mm.
which could go up and down
Yeah,
depending
that
on a
is
person's
absolutely
performance.
right. So very rightly said that. See, the challenge is that the commission is there, and there is deliberation which is going on even currently. So you will find that there are certain organizations. So, for instance, some of our clients who are into insurance sector, some of our clients where the fixed salary is less and the commission and incentives are more. So I agree to the question that there will be a change in the basic wage definition every month. This is something which needs to be recalibrated. There is deliberation which is going on currently. We hope that probably the commissions and the incentive parts of the variable, these kind of things which can be linked to the performance, they may not be included while the 50% thing is being calculated. So there is industry which is working purely on commission and incentives. May not be the entire industry, but there are certain industries which are purely working on commissions. So of course, this is one area which is still a little gray. No black and white answer to this. Done on
Okay.
this.
Sure. And I think there is still a lot of questions around when is this actually going to get implemented, because depending on
So
this, it looks like there is
it
a lot of work that needs to be done before this gets
says
done.
basically that what, as per our sources, and we are also gathering information. So from our sources, what we have understood is that the intention is to get it implemented from 1st of April. And we also need to appreciate and understand this, that whenever there is a new change which is happening, like for example, a very classic case is that last year when COVID happened, there were so many things that we were made to do because of the urgency, because of the mandatory conditions that happened, and we did that. If we were given a choice, we wouldn't have done it. It's the same thing. Of April, probably it can get implemented from 1st of April, but there will be a transition period. And remember one thing, relating back to the judgment of the Supreme Court in 2018, we had a lot of apprehensions that whether this judgment is going to be retrospectively, it is going to be from the month of the judgment, or prospectively, how it is going to be implemented. And for the first 6 9 months, we had a lot of fear that what is the PF inspector going to do with all that stuff. But then the government gave us that transition period, and now things are all clear. So I believe that in this wage code implementation also, there will be a transition period. There will be mistakes done. There will be mistakes for with while we are implementing things. There will be execution mistakes, and the mistakes can be from employer, the mistakes can be from the government department, the mistakes can be from any place. However, this will take its time, probably 6 to 12 months to get mature. So I think we all have to be very positive about this. And please remember, the gratuities and etc. things, but there is also a lesson compliance burden. There is also transparency which is coming in. So there is positives, a lot of positives also in this. So I believe that yes, there will be a lot of gray areas right now, which will we all will be able to unearth, will be able to understand it better, and it will take 6 to 12 months to do the complete transition.
Yeah, and I think because so there are a few questions on the whole contract labor and the gig workers and fixed term employment piece. So if you could just maybe clarify a few
Yes.
points on that.
See, if you see that large part of our Indian economy is unorganized, very large part, and I will request everybody to look at this from the Indian economic standpoint rather than only thinking from an individual organization standpoint. Now, when we actually inculcate the unorganized sector with the organized sector, so the intent is the benefit of the social security should be given to the unorganized sector too. And when we do that, what we are doing largely with that unorganized sector population is that we are actually ensuring that they have their social security norms in place. And this social security is not only for the breadwinner, the social security also is a very important factor for the whole of the family. So, what the government intends to do is that with encapsulating all the gig and the fixed term employees, they want to pass on the social security benefits to them. Of course, there will be an increase in the wage bill, but I think again, this is going to take 6 to 12 months. Probably 1 year we will feel the pinch, but from next year onwards, that won't hurt. And now, when this happens, the larger impact on the Indian economy will be that when we are having organized sector, so unorganized sector and organized sector which gets merged, the benefit that the industry is going to get is that we will be in a position to actually utilize the services of the gig workforce or the fixed term employment. So I can today hire a person to only do a particular activity instead of hiring a person. And I know that probably the person is supposed to be or will be utilized only for 40% or 50% of the time, but still I hire him for the entire time organization. So here what I'm saying is that if we are moving the unorganized and the gig together, then this will get fructified in such a manner that we all will be actually appreciating this move.
Sure, because there is also a very, very interesting question there. They're saying that you are a product organization, and how are you preparing yourself for this kind of a shift, and how PeopleStrong product is ready to handle some of these changes that are coming.
Sure. So absolutely, a very pertinent question for not only for PeopleStrong, for all the companies who are managing the products. Now, the good part in PeopleStrong is that the framework that we have used to develop our product. So whenever there was a change by the government and the change for the Supreme Court judgment or any change, what we have done is that from the inception, from day one, each and every rule and regulation which is defined by the government, we have actually created a layer in the product. So whenever there is a change in any kind of rule, we don't have to do a lot of coding in that. Rather, I will say that 90 to 95% of the times we don't end up doing coding because we only have to build a layer. And as I said, that there are a lot of permutation and combinations which are stored in that layer. So we only have to tweak that configuration and we are good to go. Now, so when the Supreme Court judgment came, we already had that layer and we were not supposed to do a lot of tweakings. Not entirely that we did not do any change in our code. We did little change in our code, but not a huge thing. On the same lines, we don't foresee a lot of changes in our code that we have to go through. Of course, as I say, that a lot of clarification is still to come, how the incentive and the commissions are going to be taken care of, and when the incentive and commission is going to be clubbed with the wages, and this wage moves every month, how that is going to be taken care of. But largely today, we feel that the framework that we are using, we don't have to do a lot of things. There will be little configuration changes, little tweaks here and there. So we will be in a position to deliver.
Yeah, and Shantanu, maybe a question that you could, answer. Is there any change or any consolidation of the whole, trainee, graduate engineer trainee, and the Apprentice Act? Is that also covered under these codes? That's also a couple of questions around that. Shantanu, you're on mute.
Yeah, can you just repeat the question?
Yeah. So, Shantanu, basically, there are a few questions on the whole applicability of the engineer trainees or apprenticeship trainees that currently are practiced in the manufacturing industry. Is that changing? Which code it is going to come under? So, there is a few questions on that as well.
Look, the Apprenticeship Act is totally different. It has not been covered under the IR code actually. Okay, so the rules and the regulations of the Apprentice Act, in which the organization hires the apprentices, will remain same actually. So there, it has not been covered under any of the codes.
Okay. Yeah. Thank you, Shantanu.
Yeah.
Also, I think there are a lot of questions around the whole special allowance piece, Vikas, because I think many companies, have had to make some changes once that special allowance related, I think, judgment had come in. There are a few questions on that. So if you could clarify that aspect, I think that will help. Yep, because you're not audible.
Am I audible now?
Yes, you are.
I'm saying, what's the exact complete question, please?
So the questions are various on special allowance. Where does special allowance go, and how is that being treated?
So basically, what we were doing earlier as an industry was that we were interpreting special allowance in the manner which was suitable to both the employee and the employer. However, the intent of the lawmaker was not like that. So the intent was that the special allowance has to be given to a certain specific category of the employees in a is treated as a balancing figure, nothing more than that. So it's good that you add that back to your basic wage. It is only a balancing figure, nothing more than that. So when you are recalibrating your compensation and benefit, and you are starting from your CTC and moving downwards, so what you do is, while you are moving downwards, you take one component as special allowance, which acts as a balancing figure. So you give your retirals and you create your flexi basket. So whatever is the leftover comes into special allowance. So that's the only thing that we are utilizing special allowance as.
Yeah, and I think on the health checkup, maybe Shantanu, you can take this one. Can you hear me, Shantanu?
Yep.
Yeah. So the mandatory health checkup for age group 45 and above. So there are a few questions on whether that is applicable for white collar, blue collar, or what's the clarification there?
Look, it is stated in the Occupational Health and Safety Code. So anyhow, generally, if I talk about occupational safety and health, so they are being taken care of in the manufacturing plant, basically, because we need to go for safety regulations, we need to go for safety registrations and for the manufacturing plant. So, but as far as the white collar employees or other industries, whether they will be having the annual health examination is concerned, the code is silent on that. It only says that for employees aged above 45 years and above, the annual health checkup has to be done. They have not, the code does not mention any type of industry, but they have specifically mentioned about the numbers, the age for which the annual health checkup has to be done, and it has to be done within 120 days on the commencement, from the commencement of year. There was one question as well, whether it is a calendar year or a year or a financial year. The code is still silent on that. They have just mentioned the commencement of year. So till the time the rules does not get notified and in the gazette, there will be some answers, which still remains unanswered.
Okay.
Yep.
Sure. And I think a lot of people are still asking that can we get a link to the recording, or can we get the presentation? So the answer is yes. All the registered participants, we will have this particular presentation shared with all of you who registered for this. And we'll also, once we host this recording on any of our channels, we will also share that link of the recording with you. Right. I think with that, Vikas, can we move forward, please, to the subsequent slides? There are just a few more that we have to cover, right?
Yes, I hope you're able to see the screen.
Yes, Vikas, we are.
Just a second, please. Okay. So just want to also share with all the participants that we at PeopleStrong, we serve our customers through our product and services. So we have detailed technology, very configurable, a complete DIY and a complete automated system that we have. Um, and some of the leading organizations that trust PeopleStrong, alt on the right side, you will find that these are some of the leading organizations that trust PeopleStrong. We are processing payroll and serving the customers through our services, that is compliance services and managed payroll services, since the year 2005, processing about 600,000 paychecks every month. We are GDPR compliant, and EY does our VAPT audit every quarter, and we are SOC 1 Type 2 compliant. And we also have our own India's first HR mobile app, which also has got Genie, which is our chatbot. So through technology, what we are doing is that since when we started in the year 2005, the process was largely dependent on people. And people will mean that people have to remember. So if one person moves from one organization to another organization, there is failure of information that does not get passed from one person to another person. Now today, when we say that we are processing payroll, or not only payroll, apart from payroll, other complete employee life cycle thing that we are doing through our technology arm, the each and every process that we do in the system is all automated. So your entire input collation is not supposed to happen on an email. It happens on the technology. And the moment you collate your input, we have created certain validation layers, and with the maker and checker concept built in the technology, what we are trying to do is that payroll should not go wrong. So when we say that payroll has to be 100% accurate, it has to be delivered timely, that is a given. Payroll has to be 100% accurate and it has to be delivered timely. What else can a payroll system do? So some of the case studies that we have done, for example, in Amara Raja and in future when we did that, so we are able to help employees give that experience, that the employees and the users of our system are able to increase the productivity, because the whole system is stitched together in such a manner that the entire input collation happens from the system, the whole processing logic is there, and the entire output generation happens from the system. That's what PeopleStrong Alt is. And we are really very, very thankful to all our customers who have been part of this journey, because we have learned so much from our customers and we have inculcated in our system. We are thankful to God, that to Almighty, that we became very good listeners, patient listeners to all our problems of the customers, so that we are able to solve them. And today we proudly say that we are able to process 600,000 paychecks every month, and we are able to have an impact on families, as we are processing close to 30,000 crores of salaries in 1 year. And so thanks to all the customers who have had faith in us. Another thing that I want to share is that if we can help you, and you can share You can send an email at amit@peoplestrong.com. So if we can be of any help to you to check how is the payroll health of the organization. So we have created a questionnaire, and you can use that questionnaire, and then you can book a free compliance and payroll consultation with us. We will be happy to assist you with whatever experience we have gained in the last 15, 16 years from by serving all our customers. We'll be happy to serve you. Lastly, thank you very much, everybody, for joining this webinar. Appreciate your time. I hope you have been able to answer some of your queries. We'll be sharing this PPT. We will also go through all the questions that have been posted. There are certain questions that is listed, and we will share the FAQs with all the participants along with the PPT and along with the link to the video. Thank you very much. Thank you.
Yeah, thank you, Vikas, thank you, Shantanu, and thank you all of you for joining on this particular webinar. We really hope that this has helped you understand the various labor codes that are going to come in force, and particularly the wage code, because and the reason that we created this webinar was also because we understood a lot of our existing customers and a lot of people that we were talking to in the market had certain clarifications and concerns about, particularly about the wage code, and that's the reason that we organized for this webinar. Thank you very much for your overwhelming response to this. Reiterating that yes, the recording of the session and the PPT will be shared with all registered participants. Of course, the PPT will reach you before the recording, and then in case you have any follow-up questions, you are already an existing PeopleStrong customer, I think you already know that you can reach out to your account director or to your customer success manager, and we are happy to do a more detailed follow-up conversation if you are an existing customer. If you're not, we've already shared this particular email ID here. So please do write back to us, and we will be very happy to take this forward. So thank you, everybody, and thank you to our marketing team who has been working at the back to ensure that this goes well. So with that, I think we will conclude the session, and we hope to see you guys soon in another session that we may plan on this topic in the subsequent days to come. So thank you very much. Have a safe weekend, and bye-bye.